Before we discuss where USD JPY or GBP JPY, where these pair will go and where GBP USD will go, first and most important thing is you have to understand where dollar index will go. And this is your dollar standard. It has not completely collapsed. We are still there, but slowly it is changing. In past it was based on GBP. Today it is based on dollar. Future nobody know, but market speculation right now are bricks. And once you understand this thing, in dollar system there are certain rules. When anything bad happen in the world, dollar goes up. Fed did rate hike. Small country like Pakistan, Sri Lanka, they went bankrupt. And if you remember September last year, what happened in UK and Japan economy, they were also in trouble. And July month has started. On Monday you will see first working day, and this will be first week, and all the important news from Monday to Friday I have already explained in detail in gold video. So they are important and they will decide July FOMC decision. Since USA today, and nobody know the future with 100% surety, but today still USA is largest economy. And if their economic direction change from boom to recession, then monetary policy of all central bank will change. Or like ECB, which you can say copy paste of Fed monetary policy. That's why Euro USD is always inverted chart of dollar index. So forget what happened in first quarter, second quarter. That's mean first half of this year. And your focus should be second half of this year, and what investor will do in third quarter, and what can happen in fourth quarter. One thing I saying since last year, rate cut is sign of central bank panic. Central bank only do rate cut when things are bad. And what central bank and news were saying before June 30, forget about it. And what you see in news and all central banks say after July 1st, this is most important. And since rate cut is sign of market panic and there is an inflation crisis everywhere except China, and in Japan it is beginning, but soon they will face inflation crisis. But main is USA economy because they are big, so what is happening in their economy is global trend. And only way to solve inflation is recession. And recession will be your hard landing. That's mean deep and long recession, same like 2007 to 9. And if hard landing come after long time of 2009, then dollar can go up. How high it will go, nobody know, but hard landings mean dollar bullish. And soft landing means dollar bearish. And you can see since last 6 months dollar did nothing, neither up or down, it is sideways. because you saw before Silicon Valley Bank collapse, there was soft landing, and then market sentiment immediately changed. Everyone was thinking about hard landing. Then sentiment changed again because everything right now is back where it was before Silicon Valley Bank collapse. Fed terminal rate same to same 5.6%. Fed balance sheet, if it makes new low, it will create big market panic. So until this clarity does not over, until people lost all hope for soft landing, this will stay sideways. And if it make triangle correction, which means one more final wave to upside, retest of upper trend line, and if that happen, then it can break to downside. First support will be 98 level. And if something happen, people saw hard landing because all economic indicator will start this week, and until July FOMC meeting, all money manager will see carefully that how economic trend is changing. So first understand this thing: hard landing, dollar bullish, soft landing, dollar bearish. First downside support 98, and right now it is testing this upside resistance. So if it is triangle correction, it is not complete. So daily time frame key support 100, and this trend line, which can be possible triangle, and this upper trend line are important. But in case if hard landing sentiment return again, dollar become bullish, because I think if Fed balance sheet make new low and your inverted yield curve, it is also there. If both thing make new low, then you can see new bankruptcy news like Silicon Valley. But it depend if Fed balance sheet, that's mean QT, and inverted yield curve, if both make new low. Then next, your Euro USD currency pair. So if this is triangle correction, wait for the test of upper or lower trend line, and price is right now in the middle. And in last video I explained it is making support on 200-day EMA. So this can be your possible chart pattern, and these dotted trend line are your horizontal support and resistance. And if you see weekly time frame, then meet support on last resistance, and if breakout come to upside, that's mean dollar become weak, then next it can test 1.1186 level. That is your next big resistance. But you can see after 50% retracement, price is struggling and it is showing rejection on 50% retracement level. Then next currency pair GBPUSD, and if you remember this low and fundamental reason behind that trend reversal was tight monetary policy from all central bank, especially Fed. But that monetary tightening is increasing every day, and it is more stronger than September last year. So this pair on daily time frame has made a strong trend line, and if it retests again fourth time, then on a small time frame like H1 on 15 minute you can buy. But be careful if this trend line breaks, because it is making higher high with higher low. In case of trendline breakout, it will not stop before previous support level near 1.23, and USDCAD is making lower low with lower high, and it break out and now it is trading below trend line. And if you say WXY wave, call it wave Y, and say AVC, then wave Y has almost made 100% projection. So if upper trend line retest after breakout, then technically it is sale and target new lower low.